Well, Bajaj Housing, that's under pressure following a large trade promoter. Bajaj Finance is likely to have sold 2.5% equity worth around 1,900 crores. Hormuz joins us to tell us about this listing, that there was a lot of interest out there. Stock jumped away and today the stock is down 50% from the highs. Hormuz, run us through that piece.
Well, the most bid IPO at that point of time was Bajaj Housing. Bids was almost around 3.5 lakh crores for that 6,500 crore rupee IPO. Today, the stock is down 50% from those post-listing highs of 188, made a 52-week low of 95 today. A block deal took place, almost close to 2.5% equity was sold by the promoters, Bajaj Finance. Now, of course, they are doing this to comply with the minimum shareholding norms, but then there is still plenty of overhang that still remains for Bajaj Housing. That's because of the fact that even after selling today's stake, the promoter stake would still be at 86.3%. So that still means they still have another 11.5% stake still left to be sold. That remains the most important overhang for the stock going forward. And if you look at the IPO as well, you mentioned it was the most bid IPO. The QIB portion at that time was subscribed well over 200 times. The retail portion too saw healthy subscription for whatever was reserved for them. And even after that, the stock, after its listing from its IPO price of 70 bucks, went up to 190 and now trades below 100 rupees. So that is the key overhang. And of course, just as the stock continued to move higher, the retail shareholding went higher in the stock as well. From 16 lakh shares during listing day, within the next quarter, that number went up to 26 lakh shareholders. Today, that number stands at around 24 lakh, around 8% of the company owned by retail. Now, of course, mutual funds don't have a significant stake in the company. So it's only between the promoters and the retail shareholders, and this promoter stake sale continues to remain a big overhang on Bajaj Housing.
All right, Hormuz, thanks a lot for that.